Welcome, everyone, to the Information's TITV. My name is Akash Basricha. It is Tuesday, April 14th. We've got some big news this morning. Amazon is striking a multi-billion-dollar deal to buy satellite firm Globalstar and signing an Apple iPhone deal that will put Amazon in direct competition with SpaceX. We'll unpack all of that with our Elon Musk reporter and an analyst. The information also published exclusive details on SpaceX's financials, not just the revenue breakdown, but also the profitability. We'll talk to our reporter about that who broke the story. We'll then shift gears to prediction markets. Polymarket is taking insider trading more seriously, according to an exclusive report from my colleague Michael Rodden. We'll bring him on to share with us what he knows. And we are wrapping the show with a conversation about internet culture in the AI era. It's going to be a fun show, so let's get right on into it. Amazon has signed a giant deal to buy satellite firm Globalstar. It also has a new deal with Apple to power iPhone satellite features and challenge SpaceX. Here to discuss the news is Theo Waite, our Elon Musk reporter, and Tim Ferrer, president of TMF Associates. Gentlemen, welcome to you both. It's great to have you both here.
Thank you.
Good to be here.
Okay, Theo, I want to start with you. Walk us through the details of the deal that was announced this morning.
So Amazon is buying Globalstar for $90 a share, which comes out to around $11 billion, which for Amazon puts it somewhere between Whole Foods and MGM on the acquisition scale. And Amazon's going to use Globalstar to beef up its Starlink competitor, Amazon Leo, by launching a direct-to-cell service and continuing to power satellite features for iPhones, which Globalstar already does.
And the main asset that Amazon is getting through this is the spectrum here. Explain that for us.
So Globalstar operates some satellites. It also owns a bunch of spectrum, which is to grossly simplify, basically the legal right to beam down service to phones in a particular area. And Amazon will now own that, and it'll give them a lot more room to kind of build out this direct to cell service and compete with SpaceX, which is also in the midst of trying to close a deal that they announced last year for Spectrum from EchoStar.
So, Tim, a lot of people thought that Globalstar was going to get bought, including you. You thought that it was going to get bought, but I don't think Amazon was the company you thought that was going to buy it.
Well, my view was, Globalstar was going to get bought, but the challenge is what happens with Apple and Amazon's relationship going forward. And particularly, Apple has always been very nervous about being seen as being on the other side from SpaceX. And so, we have to see how this works going forward. Amazon says they'll be the primary provider to Apple going forward for direct-to-device connectivity. We'll have to see what SpaceX has to say about that.
So did you think SpaceX was going to buy Globalstar? Remind me.
Well, that was some of the rumors last fall, when Globalstar effectively put itself up for sale. Apple had a look, SpaceX had a look, some other people had a look. So I think, Amazon clearly was not in the conversation or mentioned publicly until very recently. I thought that it was quite possible that SpaceX could come along and outbid them, or just that Apple would prefer a deal with SpaceX to a deal with Amazon. But that's not how it's ended up. At the end of the day, no one wanted to match Amazon's offer, it seems.
And let's talk about the offer price, Tim. So what do you make of the price tag that Amazon has put on Globalstar?
Well, it's pretty expensive when you think about it in comparison to the EchoStar deal that SpaceX did last year. The big thing about that, yes, that was $17 billion, but there SpaceX was getting hold of terrestrial spectrum that if direct-to-device didn't work out for whatever reason, they could go and sell it back to AT&T or Verizon or T-Mobile for basically what they paid for it. And Globalstar's not like that. Globalstar has these good satellite spectrum rights, but its terrestrial rights are very limited. When it does
terrestrial rights, meaning, just for those of us who don't follow the extra and terrestrial distinctions.
Yeah. So, Globalstar's been providing services from its satellites for the last almost 30 years. It has got some permissions from the FCC to use some of the same spectrum for hotspots on the ground. but at very low power. So it's sort of like Wi-Fi or private networks in a very limited area. That sort of spectrum is a lot cheaper because you can always use Wi-Fi as an alternative for basically for nothing. So if this didn't work out for Amazon, they'd have a really hard time getting the $11 billion or so back, from selling it to a mobile operator or something like that. So I think that's the difference here is it's an expensive deal in that context that there's no real backup plan if this direct to device business doesn't work out for them.
So there's so much to unpack here. Theo, I want to focus a little bit on the Apple angle here to all this. So we do know that Amazon has this new deal with Apple. I'm not sure that we know the exact differences of this deal compared to what the former deal was, but what do you make of this? Does Apple walk away a winner here or what?
Yeah, so just for context, Apple owns something like 20% of Globalstar and has, invested in them heavily in the past few years to, kind of stand them up so they could power satellite services for iPhones. As to if they're a winner or a loser, I think they're probably a winner here. Like, if you think about their approach here, it's kind of similar to what people say they've done in AI. Like, some people might say, why doesn't Apple just buy Globalstar and run its own satellite service? Just like they've said, why doesn't Apple spend tens of billions of dollars on data centers or, acquire an expensive AI company or something like that? And in both situations, I think Apple's strategy is letting other companies take the risk and do the gigantic capex and hopefully still reap the benefits in the end. um, like an iPhone user isn't going to necessarily care if it's Apple or Amazon that owns the satellite that's giving them service, just like they're not going to care if it's Apple or Google that built the LLM that's powering Siri. Like, I think from Apple's perspective, letting Amazon pour, billions and billions of dollars into this to stand up the service is probably fine. I mean, clearly Apple could have done this if they'd wanted to, and they decided against it.
Tim, do you agree?
Yeah, I mean, Apple is the Globalstar announcement says Apple is putting in another $450 million in the short term to finish off the C3 constellation, the new satellites that Apple has been funding since the end of 2024. But the services that are described in the announcement are more limited than Apple was previously suggesting would be present. And, that reflects the fact that Amazon needs a lot of this capacity for its own needs. Uh, you know, Apple was getting 85% of Globalstar's capacity up until now, and I don't think that share is going to continue. Amazon's going to want a lot more of the capacity for its own needs, and so that will potentially constrain Apple's services, to more basic uh, texting and applications that won't be as advanced as what Starlink's planning to offer on its next generation. So we're still to see what happens in the long term. Amazon thinks it's going to be the primary provider to Apple going forward, with its own constellation that Amazon's planning to build, but we don't know what that's going to offer. We don't know what Apple's going to pay for that. We don't know what Apple wants to use there. And so, it throws that sort of plan into a lot of uncertainty right now.
Tim, I want to get to what I think is one of the most interesting parts of this deal, which is how it puts Amazon in competition with SpaceX. And this is something you alluded to. But, we have sort of thought that if you look at SpaceX's Starlink business and you look at the terminals and the mobile business, I mean, Theo has reported on how meager the size of the mobile business is right now. And here you have Amazon. In my view, they're almost sort of validating that market and saying, "Well, this is actually something that we want to go that's worth going after." Do you agree with that? I mean, walk us through your thinking.
Well, I think that there's a case to be made that people will want a bundle of fixed and mobile services. That's already happening in the terrestrial world. The telcos are selling a mixture of broadband and mobile. The cable companies are now selling that. So it's natural that these satellite players are going to think about the same issue of bundling a fixed and mobile offering. But the problem with the mobile services, these direct to device or direct to cell services from space, is that they don't offer the same capabilities as terrestrial towers on the ground. You're hundreds of miles up in space instead of a mile down the road. And so the services are limited in data rate, the services are limited in total capacity and the number of users they can support. And as Theo reported, that's sort of reflected in the fact that T-Mobile isn't paying very much for the service. So is that going to change in the future? I don't think we know yet. And we're going to have to see what happens with these newer systems with more capability, more capacity, more
But
data rate.
what's your hunch though? Because I have to imagine if I'm Amazon, right? I'm making this giant investment. I mean, I have to be thinking that the Amazon executives think that this is a market. It's a sizable market and one that that they really want to compete in. I didn't think it was that big a market. I didn't know how many people wanted it. People kind of called the Starlink mobile offering a small product, but if Amazon's doing it, it's got to be pretty big, right?
Well, I think they've got to feel that they need to compete with SpaceX across the board and not just be trying to compete in broadband. So, in a way, it could be viewed as defensive for their broadband proposition that they can add mobility to it and have everything an enterprise or a consumer might want. Um, am very doubtful that this market will turn out to be anything like the size of the broadband business. I think that's going to be the dominant area for revenues for Starlink, and I think it's going to be the dominant area of revenues for Amazon going forward.
Theo, what questions does this raise for you in terms of just the space ecosystem at large? You wrote a story a couple weeks ago about all the space stocks that had seen their share prices rise as SpaceX has charged towards an IPO. What are you worrying? What are you wondering about right now?
I mean, I think, building off what Tim said, I think really the question is how much do regular people actually care about direct to device service? I mean, everything else is going to be downstream of that. Like the average Starlink or Amazon Leo customer is going to be someone that, pays a bunch of money for a terminal that beamed service down to their home or their business, and they're going to be paying, 50 or $100 a month. The average mobile, consumer of these services, we really don't know how much they're willing to pay, if they're willing to pay anything. And there are a few other companies that own spectrum, like Iridium and Viasat, I believe, that, might potentially, like, if somebody wants to build a third competitor to Starlink and Amazon, uh, to their mobile services, like, it's possible those companies could get bid on in the future or something, and, their stock prices have gone up to reflect that. But I think there's still just really a big question about whether people actually care very much about having internet on their cell phones in remote areas, because it's just not a proven market, really.
Tim, let me ask you one more question here. I'm thinking about Amazon's approach with Leo. I'm thinking about how much they maybe planned to invest into this initiative, even outside of the Globalstar acquisition. I mean, they had a budget, right? And we're going to invest this much in satellites. I mean, have you thought at all about how much more Amazon is sort of now thinking to how much more will they need to invest now that they've bought Globalstar to further build out this offering than they would have had to spend if they didn't have Globalstar? If you're catching my question, I don't know if I'm
Yeah,
asking. Okay,
yeah. I mean, so Amazon originally said it was going to invest at least $10 billion in the broadband system. Now with all the extra costs that they've incurred, it looks like that broadband system alone is going to cost them pretty close to $20 billion to complete the first 3,000 satellites. And now they've bought Globalstar for $11 billion. And, we don't know the size of investment that they're going to put into a constellation. We don't know how many satellites they're going to build for that. SpaceX is building far fewer for direct to cell than it's building for broadband. It's only building 1,200 satellites. So the cost of that system might be only a few $1 billion, but then we're talking, Amazon going to have invested $35 billion into space. Is there going to be a return from that? And what do Amazon's investors think? I think generally the reactions have been pretty negative about that investment.
great. Well, Theo and Tim, stick around for a minute because I want to bring you back for our next segment as well. The information has exclusive reporting on SpaceX's financials. Corey Weinberg, our Deputy Bureau Chief of Finance, broke that news. He has details not just about their revenue breakdown, but also their profitability. Corey, welcome back to the show. It's great to have you here. What did you learn about SpaceX's financials?
I learned that SpaceX is talking about three business lines that it has in its ahead of its IPO. Just one of them is growing at the rate that I think investors would say is impressive and actually makes money. So Starlink is clearly the crown jewel here. It makes up about more than 60% of SpaceX's revenue overall, compared to its space launch business and compared to its AI business and XAI. It's growing 50% a year, which is a great growth rate that investors will I'm sure love, especially if it can keep that up. And it has high margins. Its adjusted EBITDA margins are over 60%. The other two business lines, not as much. Growing not as fast, more than, sort of less than half as fast, and not profitable.
Okay. So, Corey, when you found these numbers out, I mean, is this better or worse than you thought the financial picture looked for SpaceX? What did it tell you overall about the story?
When I brought these numbers up with one hedge fund investor, and I brought up the amount of capital expenditures that SpaceX had, which is nearly $21 billion last year, largely sort of settled in the XAI business, his response was not good. This is not a pile of capex that investors are necessarily going to be excited to see ahead of an IPO. And that's been the one huge caveat around the SpaceX IPO since they absorbed XAI a couple of months ago. Is you're tacking on this business that investors are going to have a lot more questions about than they would have about Starlink, which they would love.
So, Theo, now if you put these numbers into context with the news this morning, I'm wondering what further questions do you have about Starlink's business and how it breaks down?
Yeah, I mean, I think what I would still love to find out from SpaceX is, what the breakdown is right now between Starlink Mobile and, the core Starlink broadband business and how they see each of them growing. Because, the overall number and the overall growth rate is quite impressive. But like we said before, we understand the size of the T-Mobile deal is quite tiny, and that's probably their biggest deal at this point. And so I'd love to see, what they're telling investors about that.
Tim, what did you make of these financials that Corey reported?
Well, I think it's very clear that SpaceX has done everything possible to flatter the numbers to Starlink. I mean, what they bunged in there is all the satellites that they're making for the DoD and the National Reconnaissance Office, which is not really providing a service, it's building satellites for someone. And in particular, the way they divide things between Starlink and the launch business, there's no cost. All the costs for Starlink launches are in the launch business costs, but none of the revenues for that are. So the Starlink does not pay $20 million a launch, which is the sort of internal cost. That would incur another $2.6 billion of cost on the Starlink business. If they paid full price, and remember, Amazon's paying full price for all of its launches, 130 launches last year would have cost them $9 billion, and Starlink would be in a loss-making position. So I think the read across to Amazon isn't particularly favorable here. If Starlink was paying full price for its launches, then it would be making loss, even though it's an amazing business.
Well, Corey, I wonder if you got any color about how SpaceX is thinking about the launch business. I mean, like Tim said, they're investing so much into it. They have Starship coming out. I think based on your reporting, the revenue profile, it's not growing as quickly. They have these big contracts with the government. Like, did you get sort of a temperature check at all on, is the launch business still really, what they are most proud of, even though it doesn't make the most money, or how are they thinking about it?
I mean, I think you have to think about the launch business in terms of what are they going to be telling investors to pay attention to going forward, and that's why this next test launch for Starship, their largest rocket, will be so crucial, because an IPO is about telling a story about a future and getting people to buy into that story. And the launch business, as it currently stands, obviously Falcon 9 is dominant. It is the kind of rocket that goes into orbit the most, and Starlink is the kind of internal business within SpaceX that really powers that and allows that to remain so dominant. But it's a limited market. Space launch today. There's not that many commercial or government services that would lead to dynamite growth for that business. And so SpaceX is going to be pointing to Starship, and we can make this rocket fully reusable. It can carry bigger payloads, et cetera, et cetera.
Great.
If
Well,
you Sorry,
yeah.
go ahead.
Go ahead. No, go ahead.
If you think about, Starlink is the internal customer for Falcon 9 that has made it into this workhorse, SpaceX also needs to think about an internal customer for Starship if Starship is successful. And at some point, Starlink is going to have enough capacity. There was a Gwen Shotwell interview a couple weeks ago with Time Magazine where she kind of put a upper limit on how many Starlink satellites they expect to launch. And so, what is the next internal customer for a much bigger rocket? I guess it's data centers in space. And like, if you think about what Elon has said about that, it kind of makes a lot more sense in that context where like we're going to put a bunch of stuff in space. What do we put? I guess data centers are the thing to put up there now.
And Tim, have you come around to the idea of data centers in space any more than the last time we spoke to you?
Well, I think, as we talked about last time, it's necessary for justifying Starship launching every day or every hour, as Elon Musk claims it's going to do. As Theo just pointed out, Starlink itself is only going to need 1 or 2 launches a week once we get to Starship to serve hundreds of millions of customers. So the orbital data center story is what makes everything hang together. And it's even more distant in the future that we're going to know whether or not it works. I mean, we're hopefully going to know more about direct to device in the next 2 or 3 years. Orbital data centers, we may not know for a decade if it's going to turn out to be a good business or not.
Great. Well, a lot of questions. I want to thank you all for coming on to help us make sense of it. That is Tim Farrer from TMF Associates and Corey Weinberg and Theo Waite from our newsroom here at The Information. Polymarket is taking insider trading more seriously, according to an exclusive report from my colleague Michael Rodden. I want to bring him on to share with us what we know. Michael, welcome back to the show. It's great to have you here.
Hey, Cash.
Okay, so give us the headline. What did you find here about Polymarket?
Well, if you want to insider trade on Polymarket, one of the easiest ways to do it was through copy trading app. It looks like that option might be ending soon based on what we found. Polymarket has this big developers program that allows anyone with a computer to create tools, new trading interfaces, new trading bots on top of the technology. It's called the Builders Program, and it has about 200 developers in it at the moment. We found that a lot of those developers are advertising the ability to copy different accounts that look pretty close to being insider trading accounts. They're putting on very suspicious bets. They're large, they're high conviction. But these services are saying to the everyday user, hey, do you want to copy this trade? You could be an insider too. We started asking around about that sort of ecosystem. And it turns out Polymarket just recently started a audit of that builders program. So we don't know what's going to come out of that yet, but it does come at this time when the prediction markets, so Polymarket and Kalshi, are taking a lot of steps to sort of ensure the integrity of these platforms, because there's been a lot of instances where people have said, hey, that trade doesn't seem right, or did this person have insider knowledge about, the president of Venezuela getting captured, or when is the US going to launch a bombing campaign on Iran? Some people have made a lot of money by placing very well-timed bets on those markets.
Right. So, let's break this down into a couple pieces. So, at the center of this story is this developer program that Polymarket has. What exactly is this? Polymarket wants developers to uh, build apps that can connect to its predictions market. What's it supposed to do?
Yeah, so this is like a really fast-growing startup. It's very hot, and they want to get as many users onto the platform as possible. Polymarket has this open technology. You can plug into their APIs and build on top of it. And they're basically encouraging anyone with a computer to say, hey, if you know a way to make these systems work better, make them more flashy, help users make automated trading services, you can do that. Build away and then come and talk to us, and Polymarket will, review you and verify you. It'll become sort of like an affiliate program where you get a little badge on social media that says like, "Hey, I'm a Polymarket builder. You can trust me. You can send your trades through me." A lot of
Right.
these developers charge, 0.5 to 2% per trade, or per volume. But
So this is
basically,
basically helping to really accelerate people's capabilities to trade. One of the interesting things that you mentioned at the start too, copy trading. So this idea that you can what is that?
yeah. So it's like a lot of these developers in the program are launching copy trading services. So on Polymarket, for instance, you can tell what everyone is betting on. A lot of so everyone has an anonymous sort of an account name, but because it's on the blockchain, this crypto Web3 decentralized world, you can tell what people are betting on and how much they're betting. You can see their track record. And so these services sort of identify different users who might have a good track record in, say, the basketball markets, or it's like, hey, this user over here has been really good at betting on when, you know, some sort of Middle Eastern crisis is going to happen. So these services say, hey, you can follow these track record like wallets that have a really great sort of like winning streak, or it's
Hmm.
like, hey, you can get an alert where it's like, hey, look at this unusual bet. It was really well timed. It's pretty suspicious, but they have a high conviction that this is going to turn out right. So it's sort of like a wink, wink, nudge, nudge, where it's like, this might be an insider trader and you want to be on the right side of this bet. So you should put your money with this person.
Okay, I guess maybe to simplify things, and this developers program that Polymarket has had, did it make it, based on your reporting, has it made it easier for people to insider trade, or has it made it easier to detect the insider trading? Like, what was the net outcome of this program?
So there's a lot of like services competing over the same sort of, world here. But a lot of them promote the ability, like one of these services says like, hey, we had a user that turned $400 into $30,000, in the space of a couple of weeks using our copy trading platform. It's just like we tracked this one user, Rico Swab 666, who had a great track record on, when Israel was going to bomb the Iranian campaign. You don't want to be on the wrong side of these bets, so you should follow these guys. And the overall volume that this developers program has sent to Polymarket has really been growing quickly. So in November, when it was launched, it was about $100 million a month that all these developers were sending to Polymarket. In March, that equaled about 600 million. And so when you look at the overall Polymarket ecosystem, that's about almost 20% of their overall volume. So it's like a fast growing slice of where all this money was coming through was through these apps. Now that all sounds, fun and interesting, but a lot of these apps are run by anonymous developers. So it's very hard to tell who is behind these apps at all. Like I had a lot of trouble trying to like talk to these people. It's all on encrypted messaging through Telegram, so it's very difficult. And there's also some security issues. As our story shows, like two of these developers were hacked in recent weeks, and people lost money. Now the actual developers made various claims about the people who were going to be refunded, and that security audits would be launched, but it's obviously like a pretty murky space, and there doesn't seem to be a lot of controls around who can launch these programs, who can be lured to these things. So it's like, it does come with the risks as well.
Right. So what has been the change that Polymarket has implemented, if any, according to what you found?
Well, it's hard to know. We found out that Polymarket did start an audit of its developers program recently. Polymarket won't tell us when that audit began.
Or
They
why they're doing it?
It's not really clear, but it seems to be along this move where the platform is trying to insulate itself from these criticisms that it's faced. It's facing a lot of different lawsuits from the state lawmakers about, is it stepping over gambling laws that the states are in charge of? Now, the federal regulator is on the side of Polymarket, but that is still working its way through the courts. But also, a lot of people in Congress are very upset about the notion that government employees might be trading on insider information, or sports people might be placing bets through these channels. And with Polymarket in particular, it's very hard to know who is actually behind these bets because it's anonymous for one. You don't have to sign up with an identification card, and a lot of people access the services through VPNs. So I think it's a pretty big challenge for the platform to actually ensure the integrity. So it's still yet to be seen what they're actually going to do or how they're going to go about it. And I guess it's up to them to explain it.
And, I guess there's so many other questions I have, but I guess at the end of it all, Michael, did you walk away more or less confident that insider trading in prediction markets uh,
Well, it's like
will end or be less frequent?
it's sort of like this interesting philosophical question because the prediction markets, their big claim was like, hey, we want to be the ultimate arbiter of truth. It's more accurate if people are putting their money where their mouth is for things like in the election, it's more accurate than polling, they claim. Or with any sort of prediction market, they're saying the people who put their money down actually know what's going to happen. And who has the best source of truth would be a person with insider knowledge. So it's like, on the one hand, these platforms are sort of like built for this, and it's a great source of truth to get an insider to trade on it. That sort of conflicts with the man on the street that sees it as a little bit unfair, or that it's a different channel to trading in the securities markets where it's policed, or it has been, under, historically anyway. So I think it's like an interesting philosophical tension that has to be resolved at some point, or maybe not. Who knows?
But okay, one more question for you. I mean, you in your story, I think you mentioned that you talked to at least the developers who were participating in this program. You talked to them about the insider trading that they may be facilitating, whether knowingly or unknowingly. Some of these people agreed to talk on the record, not on the record, et cetera. But I mean, I wonder when you talk to folks in this community, the developers, maybe even the traders, like what's their what are their thoughts on the morality of this? Are they just wanting to make money?
Yeah, no, it's a good point. So it's like, yes, money is a very powerful incentive. I spoke to one person who worked in the data analytics space who said that, you know, if you were an honorable person and you wanted to leak insider information, you could do that through the media. You could just tweet it out. You could go direct. But in reality, people often need an incentive to get that information out if they want to. And lo and behold, prediction markets have sort of given people an incentive to get that information out. So we're sort of dealing with this world that is very libertarian, very sort of like willing to push the boundaries. So I think, if they want to be sustainable over the long term, it's something that they definitely have to think about. But it obviously conflicts with the whole reason these platforms were created, which was to bring truth to the masses and reward them financially for doing so.
Tough job to do, I guess. Okay, well, Michael, I want to thank you for coming on. I encourage everyone to check out the article. That is Michael Rodden, our finance reporter here at The Information. AI has overhauled not just content creation, but also the advertising landscape and internet culture at large. The Webby Awards offer an interesting snapshot of how things are changing. They are being announced next week. I want to bring on Jesse Feister, Executive Director of the Webby Media Group, to talk more about all of this. Jesse, welcome to TITV. It's great to have you here.
Thanks for having me.
So, hey, we were just talking about prediction markets on the last segment. Are prediction markets, are they nominated for any Webbies this year?
So, no prediction markets this year. I wouldn't be surprised if we see some of that work pop into next year's Webby Awards. But to your point, this year has really been about AI and creators, right? We've seen more not only AI applications and AI experiences, but really how AI has moved into the creative process of so many different types of creative people making work on the internet. And there's a really interesting tension about what is good as technology changes how we can create. And at the Webby Awards, we've been doing that for 30 years. We're pretty good at helping put some definition around what great work looks like as the internet changes how we create.
So I do want to ask about what good is, because obviously you have a panel of judges that assesses all these projects. And I think, look, when we think of Webby Awards, I think, 10, longer than that, 20 years ago, it might have been, just blogs. Now the ones that are
Right.
most interesting to me are these AI apps. I mean, you're putting Claude Code up against another tool. I know Sora was also a nominee, which
Right.
I don't even know if can you win if Sora is canceled? Is that a thing?
They're still up in contention. The work
Okay, okay.
speaks for itself for what it was. Yeah.
Got it. So, I mean, I am interested though in your view as to how you assess what a good product is in the era of AI. I mean, what are the criteria that you would evaluate, a coding agent on, for example, as you
Right.
think about this?
So to your point, we do. I don't judge the work. We do have a wide range of perspectives involved as judges. So we have 3,000 Academy members from all different types of internet expertise come together to sort of evaluate different things happening on the internet. And AI products have their own sort of rubric baked in, right? How is it adoption? Are they driving value? We set a criteria that's relatively loose. We look at and we allow our judges to really make the distinction as to what they think the best work is. So one guiding principle we've used this year when it comes to just AI at large is, does the work build and maintain trust with its audience? I think that's a really important flexible set of criteria that allows you to look at different types of applications, different types of experiences, and say, well, based on what it's trying to do for the audience, is it building and maintaining trust? Because I think that is ultimately the criteria that allows for adoption and allows for long-term value creation as well.
To trust, like, how do you measure that? Is it a feeling? Is it quantitative? Like, how do you go about
So it's
assessing
and
trust?
for us, it's distributed perspectives across the landscape of media, entertainment, and technology. So we have a lot of eyeballs look at the same work, and it normalizes to a pretty repeatable sort of score. And again, we're distributing the perspectives of many different types of judges, and we let them sort of make the call, and ultimately that ladders up to
Hmm.
a winner.
I wonder, as I've thought about these, again, on the show here, we've largely been focused on these AI tools, which ones make money, which ones are being invested in. A core part of these tools are the models in the background. And to have the best model, you have to have capital and you have to be able to spend. I mean, I wonder, as you've studied these tools, I mean, is it more likely that one of the big AI labs will win an award because they were able to invest in the best model? Or, I mean, have we in the past seen smaller startups that don't have as much capital and maybe something goes viral? Can they actually win? Because at the end of the day, the models, I mean, that's what requires to work, right?
Sure. Well, so it works both ways, right? So of course, more capital is going to mean you can invest in more depth. And again, you have perspectives coming from different parts of the internet that are going to push a specific point of view that may or may not be the thing that breaks through. For the AI sort of models specifically, that's one area of the Webby Awards. But when you look at all of the different work coming in from across the internet, of course, it helps to be capitalized. It helps to have resources, but creativity is sort of being more and more democratized. And I think what you're seeing with the Webby Awards this year is there's lower barriers to entry. There's more work being created. And as a result of that, there is a lot of noise. There's a lot of work on the internet that's not good, but there is stuff that's breaking through from spaces that it just wouldn't have been possible otherwise. And I think that's the most exciting thing about the internet and sort of AI right now is that more and more people are able to be creative and sort of see their vision through. I think that ultimately leads to better ideas breaking through. But I take your point. In certain areas, being really, really well capitalized is going to have an impact. But that's not a distinction that we make as for criteria, but ultimately that will probably lead to some leaders showing up in unique ways.
And what's your hunch here? I mean, as you look at the other categories, advertising, creators, even podcasts, I mean, I think about the extent to which this content is created by AI or augmented by AI. You know, we talk about human in the loop here a lot on the show. I mean, is your hunch that the best products will remain sort of created by humans? Or, I mean, from what you're seeing in the landscape, is your hunch that, you know, AI could walk away with more of the creation awards?
So, look, I don't think anybody knows exactly what it's going to end up looking like, but I can tell you what I've seen so far and what I think we've seen over the history of 30 years of the Webby Awards is a new technology comes to market. It sort of disrupts how people create. It disrupts what traditional sort of media looks like. And then there's this period of time where early adopters jump in, they experiment. It's not seen as credible what they're doing because it doesn't fit to the standards of the past. And eventually it becomes mainstream because it works itself out and it's adopted more widely. So at the Webbies, what we try to do is build some recognition around the early adopters who are doing something really distinctive and really great, and shine a spotlight on it so that it can be proliferated across the rest of the internet. We want to help these technologies be used in ways that are creatively as good for humanity and for the internet as possible. I think that we're going to continue to see, you know, people innovating to the extent that AI will fully build human creativity and art. I don't want to speculate to 20, 30 years out, but I think in the short term, we're going to see a lot of great human driven creativity being enabled by this technology.
Great. Well, Jesse, I want to thank you for coming on. That is Jesse from Webby Media Group here on TITV. That does it for today's show. A reminder, we are on this stream Monday through Friday at 10 a.m. Pacific, 1 p.m. Eastern. If you can't make it then, episodes are available on theinformation.com, our YouTube channel, or wherever you get your podcasts. Make sure to follow us on social media on X, Instagram, and TikTok. And a special shout out to a new billboard up now in Times Square, thanks to our sponsorship with the New York Stock Exchange. Check it out if you are in New York City. It'll be up for the next 2 weeks. I'm already excited for our next show tomorrow. Have a great rest of your Tuesday. Bye-bye for now.